day to have you on, Marty. Thank you so much for coming back and joining us in the live analysis room on FXStreet. Every time I see events happening, unfolding in front of me, I keep thinking about your October 1st date, and it'd be great if I could get an update from you based upon your belief from your model that we're entering sovereign debt crises. Are you seeing things that are confirming your view since we last talked and you were showing that great movie, The Forecaster?
Yeah, I mean, everything's still moving in place. You've got, I mean, look at everything that's happened. You've had, Cantalona moved to separate from Spain. You have got Spanish elections December 20th that look like might overthrow the government. It's pretty much everywhere. I mean, you got Trump leading in the polls. The Republicans are threatening to put in their own candidate, regardless of what the people say. I mean, it's total chaos.
Marty, I was going to get to this at the end of the interview because I want to talk to Marcus, but since we're there, what I'm seeing is it reminds me a lot of the 30s, where you have the rise of ultra right-wing nationalistic type leaders that just happened in France, the other countries you talked about. And what's surprising to me is what's happening in Poland, because they were the economic miracle of the former Eastern Bloc of the Soviet Union, and they have all kinds of right-wing nationalistic leaders right now that are getting very draconian. Is this part of the movement towards extremes on the right and extremes on the left, although I'm seeing more towards the right than towards the left?
Well, eventually the left and the right meet.
Okay.
Because they end up agreeing on one thing. It's always somebody else's problem, So,
okay.
But during the Great Depression, that's basically what you saw, protectionism. I mean, that was all very nationalistic movements that you saw back then, too.
Right, that's what I'm saying. Yeah, that's why, plus scapegoatism, anti-immigration, all of these things seem to be rhyming with the 30s, don't they?
Yes, it's standard operational procedure. I mean, 1933, yes, you had FDR elected in the States. You also had Hitler and you also had Mao. So
right.
1 year was quite a watershed politically across the globe. So we're seeing the same thing, and this is what our war cycle, what I've been warning about. I mean, we simply put in all the data from, going back, largely 3,000 years. And you say, okay, fine, what's the correlation? And it's very simple, and it does make logic. I mean, and what I've said many times is that nobody goes to war when they're fat and happy.
So
turn the economy down, and then everything falls apart.
Well, then Shakespeare must have been around during one of those time frames, because wasn't it he who said when the coffers are full, the people want democracy, and when they're empty, they cry for a strongman dictator?
Yeah, pretty much. His famous quote, "The first thing we do is kill all the lawyers," is also relevant, but people have to understand what did lawyers mean back then. If you were a private citizen, you could not hire a lawyer. The only people that had lawyers were the king. So the proper term today would have been prosecutors. They were going after everybody for money, which is exactly what's happening again. And so that was a tax rebellion that he was writing about. And when it says the first thing we do is we kill the lawyers, it was basically the government prosecutors who were taking people's houses to pay taxes.
Okay. So if I'm correct, your progression is Europe first, Japan second, the U.S. third. Also, I know that you were a big proponent, and that's why I'm glad I have you here, of that the dollar was going to win by default. And I have a lot of people that follow you, Marty, and you said 110.50 was a very important pivot for the euro. and we've recently recovered back to it on Draghi disappointing the market. Plus, it was a very one-way trade. You couldn't find anyone that thought the euro could rally even 100, 200 pips a few weeks ago. So, is there an interruption in this trend in the dollar? And would closing back above 110.50 change the picture, short to intermediate term?
No, not really. I mean, that's basically a weekly number, so we'd really have to at least close above, actually it's 110, about 98 or so, I think. But
Okay.
this is only a short-term thing, and it's also indicative of a problem. Liquidity has just absolutely been collapsing. And you have the main reason the euro could rally is that a lot of the banks are just telling you have to have no positions. That's it. So you're finding things much more illiquid today than they were ever before. I mean, just look at the
Yes,
bonds.
I remember.
I mean,
Yeah,
you could
the
sell
bonds.
thousands of bonds, no problem. Today you can't.
Even in the U.S. Treasury futures bond pit now, Marty, I remember, they traded in 64ths in 30 seconds, and now the spreads have really widened on Treasuries as well, and that was the deepest market we had.
Yeah, I mean, it's twofold. One is retail participation is still at about 50% of 2007 levels. So the average person is the bulk of the people are still sitting there in cash. Then you have a lot of the banks that they have gone after, fined them for LIBOR scandals, all these different things.
Yes.
And
Yeah.
so a lot of the banks have pulled back. Plus you have particularly a lot of the big former trader banks like Deutsche Bank, etc., that used to be very huge in the markets. They've lost so much money. I mean, they're pulling back. So UBS, I mean, so the amount of people actually trading is shrinking dramatically. And as that happens, this type of volatility is going to become, commonplace.
Greater.
And I've been warning that we're in a bull market in volatility, and that means a decline in liquidity. So you can see things going up 200-400 pips, and it doesn't change the trend.
Interesting. And I know that based upon your October date, you still have some very bullish long-term targets in the S&Ps. And I know that you were back in September, October, you were looking for a turning point. I guess the million-dollar question is, were those the lows for your parabolic targets that you have down the road into 2017? Or could we flush out the bulls one more time under 1830 before we get that launch in the market towards those? I think you're talking 24,000 Dow.
It seems as though the August lows are probably it. I mean, even the DAX bottomed right on the day of that model, which was very interesting. But what I've also been warning is that, it's not quite ready for prime time. So we've been running back up to the highs, you crash back down. It's just churning a lot because people are confused. They don't know what's going on. But I can tell you as a trader, I mean, if this is the major high, the gods of Wall Street don't give you 10 times to sell the high,
That's a
They give
great
you one
point.
shot. That's it.
That's a great point. So, because you've had so many multiple opportunities to get short S&Ps at 2100. So that's a great point. It shouldn't be that easy that you could think about it and have missed it and be able to do it again in 6 months. That's
Yeah, I mean, it's almost every other month practically. But I mean, so far I
let
would
me ask
say
you
our
this.
computer's been pretty good. It said called for the high in May. That's held. It called for a low in August. I don't see this thing really taking off, and probably until after the first quarter next year. Then I think you're going to see everybody start to realize that, hey, we got a problem.
Okay, well, could that be reflation?
Everywhere. United States in 16, you have 17 in France, you have Merkel having to stand up for election. I mean, the political landscape is going to change quite dramatically over the next 2 years.
Does Trump have a shot, Marty?
Pardon me?
Does Donald Trump have a shot to become the next U.S. president?
Actually, the answer is yes.
Okay.
Surprisingly
That's
enough, the one thing that you talk to a lot of people about here in the States, and I mean, I've spoken to people that were diehard Democrats, and the one thing they come back and say is, well, at least they know he's not owned by somebody else. They maybe you don't agree with everything he says, but I will say this much in my experience. Why I would rather see Donald Trump than somebody else. Every career politician I've ever met, once they say something, they will never change their mind. They're never going to stand up and say it was a mistake.
well. Then
At least
they ought to
maybe a
read what
businessman
WD
might.
Marty. Don't you think they should take to heart what W.D. Gans said? If you don't learn how to change your mind, you won't have any change left. As traders, we have to, but politicians don't, do they?
Right. I mean, a trader can't say, no, I'm right, and as it's going down 90% against you. Um, Politicians, they just simply will refuse to ever admit that they're wrong. So Obama came out and said Assad's got to go. That will be it until he's done. He will not change his mind. Um, Merkel's not going to come out and say, gee, letting in all of the refugees was a mistake. Or designing the euro and not consolidating the debts. Gee, yeah, we really screwed up. It's just not going to ever happen.
It takes a crisis for things to unwind and change with them, doesn't it? The
Pretty
whole plan
much.
to fall apart.
I think that's what the revolutionary cycle is all about, because these people will never admit a mistake. I think if they think they do, then they can't be reelected.
Okay. Marty, a major center of discussion has been the deflationary trends. I know part of it's the dollar pressuring a lot of commodity markets because it is a reserve currency. It makes everything a little bit more expensive. The crude oil market, a lot of people are starting to talk 20. I've even heard a $10 number. To me, this sentiment's pretty extreme down here, and what's happening with Russia. Making their move into Syria, and now it being possibly politically okay to blow up oil infrastructure in Iraq to prevent ISIS from getting it. Don't you think that the crude oil market is becoming a little bit stretched to the downside, and that there might be a surprise the other way, at least short term?
It's kind of hard to say you're ever. I don't see it going back to new highs. I mean, our model has been warning that $35 is the big number for year end, as far as if you close below that on December 31st, that would confirm that the major high will not be exceeded.
Okay.
If we close below 41 and a quarter, pardon me?
I'm just thinking maybe a reflex rally, maybe back into the mid 40s to 50 range from here, and that $35 number is an interesting number. I have some things there too, but do you think eventually we're going to be trading 20 with a 20 handle in crude next year, or the year after?
Well, if we close below 35, yes, that does definitely become a possibility. But you also have to keep in mind that the way commodities tend to move, they also short, sweet, and to the point. So, right. I mean, even the Great Depression, it was 1929 high, and the lows July 1932. So we're not talking about extreme, long, protracted type things. When you get into that, it's usually government manipulation, like Japan. But the bulk of the decline is usually still the first 2 to 3 years from a major turn. So in oil, our minimum number is 41 and a quarter. If you close below that, that says definitely you're in a corrective mode. Sure, you can go back even to $45, $50 range as a knee-jerk reaction, because we have very high volatility these days. But the 35 is saying it's a long-term bear market. So that's largely the distinction. And, I mean, you can see it in many different ways. For example, technology. BMW's, come out with like an i8. that is a hybrid and sports car, and it has 28 miles a gallon when you use the gasoline and 78 when you use the electric. I mean, it's amazing.
Right. Yeah,
So
things are changing.
when I was up in Amsterdam, all the taxis were driving Teslas. So, I
Interesting.
mean, there is a long-term shift as far as the requirement for energy is going to definitely change. And in Florida, the state has lost so much money from electricity production, they're looking at putting a tax on people who have solar panels on their roof.
So they want to
So,
take it away from them now too.
yeah, I mean, it's like the cigarette tax. They stand up and say, "Oh, we're doing it for society," and then when they lose the taxation, they say, "Well, we'll tax the electric cigarettes too."
Right.
It's always about
So
money.
everything. So getting back to the sovereign debt crisis, are you starting to see any cracks in the U.S. Treasury market? I follow TLT as a proxy. We haven't made new highs there. Could that be setting up for an April time zone? I'm hearing a lot about April for a lot of different cycles if the market moves sideways.
I definitely think that you'll have some money that will go into the Treasury side. All right, and the rest of it you have basically. Um, Hold on one second. I just got to turn that one off.
I think it's Santa Claus calling you.
Yeah,
Yeah.
no, that's all right. But uh, mainly, I think it's looking at a lot of money has to shift into the dollar out of just about everything because there's nothing that they haven't been able to create any kind of a reserve currency. Sure, they put in the yuan into the SDR, but that's irrelevant. That's like a pretend reserve currency. To be a reserve currency, you have to have some place that you can put billions of dollars into, and the SDR may be an index, but that's it. It's not. You still have to buy the underlying.
Do you think
So
there's
China
any?
being put into it, I think you're going to see China will smarten up and realize they're going to have to float the yuan in order for it to be a real viable currency. But also because they're at this point, you have politicians standing up and saying, oh, China's manipulating its currency. Well, they don't say that about the euro. They don't say it about anything else because they're free markets. So let it float, and then they can't say that about China either.
Interesting. I saw your discussion when you were in Greece, and people in the audience were asking you if Greece should exit the euro, and you said yes. And it makes me think about emerging market economies priced in commodities, and even the Saudis being linked to the dollar. Is it possible that some of these currencies, like the real, could depeg from the dollar, and could that change the dynamic?
Most of them will end up having to eliminate the pegs. In order to get the political change, and I think mainly for Europeans tend to look at currency differently than Americans, and largely because after World War II, the politicians said, "Vote for me, see how high the currency is now against the dollar." So it was more of a rallying point politically. An American politician can never stand up and say, "Vote for me because the dollar's up against the Mexican peso." They would just laugh. So it's a different mindset from Europe to America. Europe sees the currency more as a stock, whereas the United States doesn't look at it that way. They were actually trying to push the dollar down in '85, creating the G5
Right, the
trade.
Placid Accord.
Right. So I think that you have to understand that the dollar in going up is not bullish. That's what's going to create the political change. It's not going to change without it going up dramatically. And so by
Okay.
going up dramatically, then you'll create the same thing like in the 30s, the protectionism, and eventually then you'll see some sort of monetary system crash. And then what comes afterward is perhaps some sort of a basket of currencies that forms the reserve or something like that.
Okay. I've read that the devaluing yuan, which has been happening in a fairly big way in the last few weeks, especially since the SDR announcement, is actually more unsettling for the global financial markets than a potential Fed rate hike next week. What's your view on the yuan devaluing?
Well, largely because people don't understand what's going on. China shut down most of the shadow banking because so much money was pouring out. It's almost impossible now to get money out of China. And I mean, this was, part of the big problem. And the statistics that people look at, they didn't really understand what they were looking at all. And they're saying, oh, initially that China's trade deficit was, or didn't have it. It was making a huge surplus. That was largely Chinese companies with the right to deal overseas. They were borrowing money in Hong Kong, bringing the cash back and speculating. So they only, the trade numbers were just, they don't actually measure goods. They just measure capital flows. So everybody was assuming
they were coming over here with suitcases of cash, Marty, to buy U.S. real estate and every other service. So,
Absolutely.
they didn't care about the price. It was a hedge for them, right?
The Chinese replaced the Japanese, where the Japanese used to buy, Rockefeller Center and stuff like that. The Chinese buy all the high-end properties now.
Okay.
Canadians
Well, I wouldn't want to be
ones who buy the greatest number of American properties, but it's the Chinese that buy the big ticket items.
Okay, well, I wouldn't want to be Japanese right now if the tables are turned, because China probably has a pretty long memory about what the Japanese did to them in World War II. What do you think about that?
Oh,
and
yes.
the building of the islands in the South China Sea?
Well, I can tell you throughout most of Asia, I mean, when I was in Beijing, I just asked the concierge, I said, is there a Japanese restaurant nearby? And it looked like I was a traitor.
Oh, God.
You can't find them. You have to go down little back alleys. So it's still a very dirty word over there. The same thing in Singapore. Thai food, no problem, but, ask for a Japanese restaurant and they just give you a very nasty look.
So where's the flare-up going to be, Marty, on your geopolitical cycles? We have all these different hot spots. What's your best guess for what might turn into bravado, turning into some type of shooting war?
Well, on the international level, I mean, that's basically the two focal points are clearly the Middle East. Putin started bombing exactly on the day of the model, which was very interesting. And that's usually a serious warning when something happens to the day.
I think you put out a post that was the beginning of World War III.
I believe it probably is, yes.
Okay.
And it just
I know
keeps
you probably
getting worse.
don't want to talk about that because, it's Christmas time and we should be full of good cheer, but it sure is hard to watch the news without thinking that there's something big brewing.
It's clearly brewing. I mean, Turkey shooting down a Russian plane, that was really stupid. But you're seeing the same thing in the hostilities in Asia between China and Japan. I mean, those are the two international hotspots. But everywhere else you're looking at is quite frankly the other side. We have two models that are converging at the same time, which is very unusual. And the other one is the civil unrest. So we have that happening everywhere. Just yesterday, a film crew from Madrid flew all the way here for an interview, and because they have the political elections on December 20th, and I was really surprised. I mean, I was down in Barcelona, so I thought it was a crew that requested to come in from Barcelona, and here it was Madrid. It was the national elections for national TV. Unless you're coming here to interview me, so I was a little bit surprised about that, but it is clearly, it's everywhere. Scotland wanting to leave UK having to do a vote on the EU. I mean, 40% of the French youth want to be something other than French. Bavaria, they consider themselves Bavarians first before Germans. I mean, it's everywhere.
So, Marty, I'm sure you get this question from a lot of your subscribers and probably friends and associates with what you see happening on the world scene. They probably ask you, Marty, where can I go to not be part of this and watch it on TV instead of being caught in the middle of it? What do you tell them?
Well, I have responded with that answer, and people from that area told me, please don't say it anymore.
Oh, they don't want any more people to go there. I know some of the gloom and doom guys are like Latin America. They like South America, low density population areas.
Very politically unstable.
Okay.
There are very few places down there that you can be secure with, and I mean, the two places that our model has been showing, believe it or not, are the South Island of New Zealand and the upper reaches of Scotland.
Wow. Okay, thank you for sharing that, Marty. I want to wrap it with this. The question that's been burning for over 2 years. Will Janet Yellen move Wednesday?
I haven't actually looked at our model to see if she will do it Wednesday, but she was going to do it in June. And
yeah.
That's when the IMF came out publicly and
told
it
her
started
not
appearing
to.
in newspapers.
Right.
You don't do that. It's for them to do that meant that they had to put pressure on her because she disagreed. In September, I have I got a call from somebody down there that told me that, again, they called and said, please don't do this because if you do it, you'll push Deutsche Bank over into bankruptcy. So what the excuse is going to be this time, I'm not sure. But she has a huge problem, and that is the problem with all the pension funds. You have to get money, you have to get interest rates back up. I mean, lowering them to negative rates creates the deflation. These people don't look at both sides of the coin. They're just saying, well, gee, if we really lower it, maybe somebody will start to borrow. Okay, fine, but what about all the people you told to save for retirement? Now they get nothing.
Yes.
And you're taxing them for even doing so.
So we're going to have major problems.
They just look at one side of the coin all the time.
So we're going to have major problems with unfunded pension liabilities that have been growing because it's hard to get a return now. And that people that are counting on their retirements might be in for a rude awakening down the road from their 401ks.
I mean, look at Illinois. They couldn't even pay the lottery holders. New Jersey, I mean, all these places, I mean, the state pension funds are the worst because they don't have to follow the laws, they don't have to fund things, and nobody's going to lock them up. If you or I did that running a company and said, I promised you all kinds of stuff, but then I really didn't do it, that's called fraud.
Marty, thank you so much for updating us on your views, and I wish you and your family a great holiday season. Stay safe and continue to do the great work and keep the world informed, because at times, you know, Marty, I wish I was an ostrich and I didn't know what I know and I could just go and run up my credit cards this Christmas. But thank you for being a voice of reason in a Meshuggah world.
Well, thank you, and happy holidays to you too. It's going to be an interesting one, that's for sure.
I hope that we could visit again in the near future, Marty. Thank you for your time, most of all, today.
Well, thank you for inviting me.
All right, Marty. Good hunting, my trading warrior brother. See ya.
Okay.
I hope everyone enjoyed. That's Martin Armstrong at Armstrong Economics. Marty has a great newsletter. He's one of the greater minds in the world, being able to see things. His model, as he said, goes back eons, and it's amazing the accuracy that he's been able to pinpoint certain important major impact events in both markets and the globe. Everyone say thank you to Marty. They all loved you, Marty. Thank you very much, buddy.
Thank you.